What's good everyone, welcome back to another video. In this video, I'll be sharing with you guys how to use this simple but yet effective high hit rate trading strategy. And if you incorporate it into your trading, I assure you that you will definitely have a higher hit rate in your everyday trading. Stay tuned. Okay, so just to begin without spending too much time, I'll be going through how this strategy actually works. So very simply, every week before the week starts, just draw the previous weekly high and weekly low. Draw it and you can see it's forming some sort of range. So very simply, what this strategy is you either wait for the next weekly candle to either break the highs or the lows, and then you start to look for trades. So for example, this was last week's weekly candle, and now the weekly candle just opened, the new weekly candle. It's starting to push up first, maybe on the Monday, on the Tuesday, and finally on Wednesday, the weekly high of the previous week has been broken, but it failed to sustain this high, failed to hold it as support, and came back below the range highs of last week. Then you would start looking for shorts on the dollar because it's a high probability that because price has taken huge liquidity over here, because most people, if they're shorting the dollar, their stop losses will be here. So this strategy mainly is once price takes out the previous week's liquidity, there is a higher chance where price would start to look for the opposite end of the weekly candle, which is the downside. So high probability that once price takes out this weekly high, this previous weekly high, takes out all the liquidity, because breakout traders will start to long over here, okay, expecting higher prices because it broke out of the range, and also taking out all the stop losses of the previous week. This fills up the liquidity and fills up a lot of short orders for the bigger players of the market, and then this fuels a big short, high probability short down to the previous weekly lows. And then of course you can benefit in multiple ways because there are many dollar pairs like pound USD, EURUSD, XAUUSD, gold. They're all inversely correlated. So if you're expecting a huge downward movement on the dollar, of course you expect the upside on these major pairs. So this is just the gist of the strategy. Let me show you in real time, just last week, how this actually happened and how you could have caught beautiful longs on gold, on pound U especially. Okay, so just moving down. Okay, this is the DXY chart again. I just want to show you because it is very effective and it just happened the last 2 weeks. So let's pretend that we were just last week, alright, before this candle even happened. Let me do the playback method. Okay, so let's begin from here. Let's pretend we are still forming a weekly range, okay? And this was our previous weekly candle. So first, what do? You plot out the previous weekly high using just a range tool or whatever you want to use. I usually use this trend line tool. You click on the low, you drag it out. Sorry, let me drag it out. Alright, perfect. So this is the previous weekly high, previous weekly low. Now, this simple strategy just requires you to have patience, just wait for the setup to come. Okay, so let me just run it out. Remember, this is the weekly candle. Okay, so you can see it. The weekly candle barely broke above the weekly high and then started to push back down again. So of course you don't just view it on the weekly time frame, right? You view it on the daily, on the 4-hour. But you can see it very clearly on the daily. Price pushed up on Monday, Tuesday, Wednesday, and Thursday. It finally broke the weekly high over here. Okay, and now once this is done, and let's say you set your alert over here, you got an alert banging. And now you're looking for price, whether it's gonna hold above and continue pushing up, or just a fake out, take out liquidity, fill up all the big liquidity players for their short orders and then start pushing down. And this is exactly what happened. Took out previous weekly high, took out all the stop losses, fueled more buyers into the market, but of course all these breakout traders are getting stopped out as well, pushing price even further down. Zoom in the 4-hour, you can see a huge wick to the upside, but you can see this 4-hour candle close way below. Zooming even in the 1-hour chart, huge wick, failed to hold, came back into the range. So in this instance, you basically can see it in real time that the buyers have lost momentum, shorters are stepping into the market, and this is where you are anticipating that the dollar has taken up the previous weekly high and is definitely most likely going to tap the weekly lows over here. So of course, when you anticipate this, you expect the bulls on all the dollar pairs like gold, pound U, and EURUSD. Later I'll show you how it correlates. So again, took out the previous weekly high already. Now we're expecting it to tap the weekly lows, and that is where your trading starts. Now let's run it forward. Okay, Thursday and then Friday, we finally, with the news, broke the previous weekly lows. That's it, trade done. You set an alert over here, took out the previous weekly high, and then you waited for this setup to come, failed to hold above. We step into dollar shorts and of course dollar pair longs. This was the target. Once target has hit the previous weekly lows, that's it, target done. Your weekly trade has been fulfilled. Simple as that. This is a high, huge hit rate, and it can definitely be incorporated into the trading. Just need more patience, of course. This is high probability setups. Of course, you need to wait for these. So knowing this, you can see it's super clean, right? This trade. So, alright. This is done. Let me show you a correlation on, let's say, the pound U chart. Remember, Monday, Tuesday, Wednesday was ranging, right? On that previous week that we talked about. But once price took out the dollar highs, like previously just now I mentioned, took out liquidity, that is where pound USD was pushing down at first, but then ended up in the day pushing back up because the dollar started to lose strength and the sellers of dollars started to come in. And again, the huge push down on the dollar. If you were expected dollar to push back down to the weekly low, the previous weekly lows, you would definitely have been trying to long the pound USD chart, and of course it gave you a pretty good decent gain, right? Even if you started long on the Friday itself, you got a pretty nice 100 pips trade just by anticipating that the dollar would push back down regardless of any news to come or etc. Okay, so simply that's the weekly candle strategy. Basically, you're just waiting for the highs and the lows to come. So that's basically it. This is the weekly candle range strategy. You're just plotting out the previous weekly candles highs and the lows. You're just waiting for the current weekly candle that it's currently forming. Just wait for it to either hit the high or the low. You wait for it to deviate, hold below the range instead of holding above, and then you start to look for longs or shorts towards the other side of the range. Simple as that. So let me go through again what just happened for the dollar just last week. I plotted out the weekly high and the previous weekly lows. Simple as that. And then you just zoom into the daily chart. You just set your alerts either at the highs or the lows, whichever breached first. Let's say you put an alert here, you breached first. You zoom in a little bit further. Once it breached the highs but failed to hold above, even on the 1 hour or 4 hour, you can start to look for dollar shorts and in turn dollar pair longs. And then your target would be the other side of the range. Very, very simple. Alright, so hope this helps you out. If you found this helpful, I've just created a new Telegram channel which posts all my trade ideas and analysis on many different major pairs like gold, pound USD, euro USD. I will try to post them whenever the setup comes, and you can view this channel for free for now, of course. And I'll be trying to come out with new trading strategy ideas as well, posting on YouTube and also some trade ideas. So yeah, do join it. And yeah, a lot of free content for you, and it's very educational. So do join it. And remember, the markets are always here, but your capital may not. Peace.